So, Trace, we have the futures market, which many people are actually concerned about. They're speaking their concerns about, and we've seen what the central banks and the large bullion banks have been able to do with the precious metals market with naked shorting gold and silver, and the fact that precious metals are unable to move freely. And you've covered that a lot. I mean, you were with GATA for a while. But what now with Bitcoin? If we introduce naked shorting to Bitcoin, do you see this as a problem?
Oh my goodness! Like this is the $1 trillion can of worms, right?
Right.
um, uh, so first, yes, I as a consultant with GATA, and I was even involved and definitely understood a lot of what was going on with the gold price suppression scheme even before Bitcoin existed. And there is a lot of paper gold out there, which is why I used the analogy earlier that, the Bitcoin network is melting down $20 billion worth every day and recasting it into new Bitcoins. Uh, Thomas Petervey, he's the chairman and founder, CEO of Interactive Brokers. He's warned that the introduction of these Bitcoin futures into a clearinghouse could increase systemic risk for the entire financial system. And on Wednesday, Interactive said its clients would be unable to short the Bitcoin futures market because of the extreme volatility. And kind of right along with this, Bill Gross, he was talking about the difference between money and credit. And, this plays right in with my book that I published the same week that Bitcoin got released, The Great Credit Contraction, where the world moves into safer, more liquid assets. And what Bill Gross said is when the possibility of default increases and or the real return on credit or liquidity decreases and persuades creditors to hold classical money, parentheses, cash, gold, Bitcoin, into parentheses. So I find it fascinating that he actually puts Bitcoin in there with USD and gold in euros probably. Quote, then the financial system as we know it can be at risk. Parentheses, insurance companies, banks, mutual funds, etc., as credit shrinks and money increases, creating liquidity concerns. And so, this is going to be a very, very interesting experiment with the CME, the CBOE, Cantor, NASDAQ, all allowing to be traded these Bitcoin futures. Now, they're going to be cash settled. So that means that they're settling into USD. Well, I mean, what is the risk-free asset in the world? What is the asset that has the lowest risk profile? Is it USD? Is it gold? Or is it Bitcoin? And it's increasingly looking like it could be Bitcoin. Gold is obviously less risky than dollars because dollars can become worthless, whereas gold has never become worthless, right?
Right.
But Bitcoin is extensible and gold isn't, and they're both limited in amount by natural law, chemical law, and then mathematics. And so gold also has to exist at a single point in space and time, which means that it becomes very susceptible to being confiscated or seized or its portability otherwise impaired. Bitcoin, on the other hand, those private keys are just a number. And you can use things like Shamir secret sharing, which we have implemented in Armory Wallet, to split up those private keys, to keep them in different places. You can use scripting language in Bitcoin like check lock time verify so that the Bitcoins exist in different places in terms of time. It's also extensible. You can do layer 2 stuff. Now that SegWit got activated, you can do layer 2. And just yesterday, the Lightning Network, they did some transactions over the Lightning Network. So, I mean, we'll be able to do thousands of transactions per second with things like the Lightning Network. So the question really becomes, what is the asset with the lowest risk profile? What is the risk-free asset? And then that asset becomes what we consider cash, right? And USD and gold, man, they got a lot of risks to them compared to Bitcoin. And we're at this point in history that is totally unique. The entire world is rethinking what money is. And there are really only 3 competitors in the ring. There are dollars, there's gold, and there's Bitcoin. And the market is increasingly betting on Bitcoin. It's up to $280 billion market cap. That puts it, in terms of narrow money stock, that puts it as number 17 in the world. It just surpassed Sweden. So, I mean, this thing is not like a little tiny experiment anymore, although relative to what it could become, it still is. It's like and so these CME futures, it's like a tiny tiny shunt into this tiny blueberry that connects it to the worldwide liquidity pools that are like oceans. And with how Bitcoin functions, I mean, there's plenty of Bitcoin for everybody, as I said. It's just a function of price. And so, and last week I was actually meeting with a major Wall Street bank, even they're a bullion bank too. And I mean, there were top brass in the meeting, like managing directors, like heads of different parts of their trading and everything. And we were talking about this, and I was just like, it's cash settled, and it's going to be extremely hard to price because of forks. And whenever these forks happen, big Bitcoin hodlers, they will use the fork proceeds to just buy more Bitcoin, which takes down the saleable supply of Bitcoin, and it goes into deep cold storage. And so, like, if they try to naked short sell Bitcoin, as Thomas Peterffy talks about, I mean, they could just get totally blown out, and it could begin to pose systemic risks to the entire financial system. So, yeah, I mean, it's going to be fun to watch this price discovery happen, because we have, we're rethinking what money is. The largest tech fund VCs, the CEOs of the largest banks like Lloyd Blankfein and Jamie Dimon, they're honing in on Bitcoin's beacon. They're taking different positions. Jamie Dimon saying it's a fraud, but it could go to $100,000 a coin. Blankfein saying he's going to keep an open mind. And guess what? You get to battle all of that cognitive dissonance and everything. You get to battle that in the marketplace. And it's a game of keeps with Bitcoin because it's immutable and you can't reverse transactions. Like, there's no bailout with Bitcoin, right? And so if Bitcoin is the survivor, like, you don't get bailed out. You naked short sell this thing and you get cash settled into dollars, but those dollars have to be printed to infinity in order to bail out, too big to fail institutions that have decided to short sell it. Well, by then the world has just changed what money is to Bitcoin and gold instead of dollars. So I mean, this is a fascinating game now going to be played at the highest levels of finance. And yeah, it's a big question, like who's going to win? And a fascinating part of who's going to win, what are the costs of carry for Bitcoin? With gold, it's about 12, 18 basis points a year for insurance and storage and all that stuff.
Sure.
Right? With Bitcoin, you have no costs of carry. If anything, I guess you can impute like inflation from the Coinbase reward as being like part of your cost of carry, but that is imputed and discounted into the current price of Bitcoin. So in other words, if you're a hodler of Bitcoin, you can remain solvent longer than the market can remain irrational, right? But if you've naked shorted Bitcoin, well, you might get margin called, which means you become a forced buyer. So like the field is just tilted in favor of the Bitcoin hodlers. And so, yeah, it's going to get very interesting to see where all this craziness of speculation could take the Bitcoin price in this price discovery.
Trace, one of the things that we talked about prior to the call was I would like to get this over the call with you. And that is, at least for me, I've been seeing a lot of these different altcoins as different technologies that are coming online and on-ramps for blockchain technology uses. I mean, you have Steemit, which is a great, I mean, I'm not going to say put a endorsement on it, but an opportunity to use blockchain for content creation. Or, you have Factom, which is data storage, secure data storage. And, a bunch of other different uses for blockchain, and not necessarily competitors to Bitcoin as currency, but applications or on-ramps to blockchain technology. And at least that's where I am with a lot of these different altcoins that are out there. What are your thoughts?
Yeah, I mean, like Steemit, for example, I find that to be an incredibly interesting project because it's a way for content creators to monetize. And so, and also DTube, which uses, I think it's IPFS for video, like, with YouTube and Twitter and Facebook, like taking political stances and impacting content creators monetarily based on whatever they're talking about, the content of what they're talking about, especially with political opinions, like, yeah, we need decentralized networks that operate with consistency to one and all, right? And don't have this political bent to like the services that they offer. So like with Steemit, I find that incredibly interesting, and people can actually make more money with that than they can make with YouTube. Then we've got other projects, and you mentioned Factom, and it's like, well, why use Factom, which has its own token, and they did their own like ICO and all this stuff to basically bilk money from investors, when you could instead use the Chainpoint protocol and do the same thing with Bitcoin, but not have a token, and thus be able to do it a lot cheaper. So, like, I think a lot of these ICOs, they try to hide behind technical jargon to basically just like scam money out of investors. And if you look at ICOs, in 2017, the first half of the year, I mean, they raised like $3 billion total over the last couple of years. A lot of money's flown into them. But now you price the tokens of these ICOs in Bitcoin, and they're down like 80, 90%, pretty much across the board.
Right.
So pretty much, you look at these ICO scams, and sure, there might be a rare case where some actual R&D is getting done. But that's, really what I think the purpose of these ICOs is to separate people from their Bitcoins.
That's interesting. Yeah,
they're just a bunch of charlatans.
Well, and I see your point, but is it fair to say that, and you gave the caveat that there might be some that are out there that are not, but that's almost like making the point that everyone needs to use Amazon because they're becoming this big behemoth giant, or you have to buy a car from a certain car manufacturer because they're the biggest and they're the best. Why go anywhere else? Well, that's just the nature of markets. They're going to be competitive, and when there's opportunity in an area, people are going to dive in left and right. And won't it be left to the market to decide whether or not those other coins are viable or not?
Well, I mean, that's what I'm pointing to. I'm pointing to the scoreboard. Like if these coins were actually viable and actually useful, then their price in Bitcoin would be going up. But instead, that's going down 80, 90%. Mm-hmm. I mean, these are all just a bunch of like clown car shows with a bunch of amateurs or actually professional like thieves and charlatans. I mean, there are very, very few altcoins out there that have outperformed Bitcoin in terms of Bitcoin. I mean, I interviewed Evan Duffield. He's the lead developer for Dash. I interviewed him. Dash was $3 and it was 0.009 Bitcoin. Dash is currently something like $700 and 0.05 Bitcoin. Mm. So it's up maybe 5x in terms of Bitcoin over the last 24 months. So, I mean, you have to, if you're going to shift what the risk-free asset is, or the asset with the lowest risk profile, what it is, to Bitcoin, then you need to start using Bitcoin as a numeraire also, that you measure all your other investments against, whether it's a triple net leased property, whether it's a stock, whether it's your dollars, or whether it's some ICO scam that you might get suckered into.
Sure. No, I totally agree with you on that. But I'm almost, my mind is just kind of running in circles here. I'd almost say that it's in a different category. If you're going to look at a certain coin that's working on a specific project, it's not like you would buy a specific stock and price it at Amazon, let's say, just because it's a stock. You have one company, and then you would have another company in a completely different sector for a completely different purpose.
Right, but Bitcoin is a protocol. I mean, we're talking about things like HTTP, TCP/IP, SMTP, and you build these layers of these protocols. So why would you want to go with one of these altcoins when you could when instead all of that work in that project could be done as a side chain that's interoperable with Bitcoin and that's impregnated with Bitcoin, so that you essentially have a put option that's the value of the Bitcoin that you've embedded into that side chain. And especially with Rootstock that just got launched earlier this week on December 4th. I mean, there's absolutely no reason that any of these altcoin projects shouldn't be done as side chains or through the Rootstock platform in terms of the smart contracting language. If you're actually looking at it from the technology and everything, I can't really think of very many reasons that you should be doing it somewhere else. And but from a financial standpoint, I could see why you'd want to do it somewhere else. It's so that you could bilk a bunch of Bitcoins out of people. And I mean, while I was down in Latin America, we had a panel about scaling Bitcoin and forks and stuff, and we had one of the guys from Ethereum on the stage, and I asked him, is Ethereum scalable? Which is kind of, the joke, but we saw that CryptoKitties just totally crashed the Ethereum network again. And so the Ethereum network is really only scalable in the number of tokens that it emits, not necessarily in terms of its network. And yet Bitcoin is the only blockchain that has proven security, scalability, and liquidity with the financial markets. And now with CME futures coming out, that liquidity is going to take even another step upward. So it's if you're not going to build on that, which now has Rootstock and side chains and this interoperability and Lightning Network, it's a really big red flag. Why aren't you going to build on that? And why are you going to go build on something else? As an investor, looking at whether you should allocate any capital to their particular project or coin or whatever the thing is that they're trying to get you to trade Bitcoin for.
Sure. And Trace, I think you're one of the smartest guys out there, and the scoreboard, as you've pointed out, proves that without any denying it. So I think it's super, super amazing. And again, I appreciate your insight on that because, as someone who's not super deep in the technicals and just the understanding of what's going on behind the protocol, sure, it's easy to get distracted with certain other things. But I would point out